Welcome to Tell Me More Stories Told as podcast.
Great to be here.
Today, we're embarking on a real adventure, kind of a treasure hunt. But we're not looking for pirate gold.
No, something we actually use every single day. Money.
Exactly. Money seems so simple, right? Coins, notes, numbers on a screen. But the story behind it, it's incredible.
Oh, absolutely. It's a saga, really, full of surprising twists, ancient history, digital futures.
Oh.
It's quite the tale.
So let's dig in. We want to uncover that fascinating story today. First things first, what is money, fundamentally?
Well, at its most basic, it's anything that people generally accept as payment for goods, for services, for settling debts.
Okay, accepted payment.
And crucially, it also has to be a verifiable record of that value.
Verifiable record,
Oh.
right. And it plays some key roles in the economy, doesn't it?
It does. Three primary functions, usually. First, it's a medium of exchange.
This is the big one that avoids bartering chaos.
Precisely. Imagine you grow fantastic apples, but you need shoes. Without money, you have to find a shoemaker who, one, wants apples right now, and two, has shoes you actually want.
Yeah, the coincidence of wants sounds inefficient.
Extremely. Money acts as that intermediary. You sell apples for money, then use money to buy shoes from anyone who sells them. Simple.
It just smooths everything out. What's the second role?
It's a measure of value, or what economists call a unit of account.
A common yardstick.
Exactly. It gives us a standard way to compare the value of different things. How many apples are those shoes worth? Money gives you the number.
So we know a car costs way more than a coffee without having to think in terms of, I don't know, chickens or something.
Right. It simplifies economic calculation immensely. And the third function...
It's a store of value. You can earn it now and spend it later. Save up.
Yes, you can hold on to wealth in the form of money. Though, as we'll see, how well it stores value can... well, it can fluctuate.
Like inflation eating away at savings.
That's a key example. Some older definitions also mention a standard of deferred payment, basically settling debts over time.
But that's kind of covered now.
Yeah, modern thinking tends to fold that into the other three functions, mostly medium of exchange and store of value.
Okay, so it exchanges, measures, and stores value. Simple ideas, but wow, revolutionary. Where did this all begin? Let's go way back.
Way back. Before coins, before metal even. Barter certainly existed, people directly swapping goods and services.
For potentially a very long time, like 100,000 years.
The evidence suggests it's ancient, yes. But it probably wasn't the main way societies operated, especially within communities.
Oh, so not just constant swapping.
Not really. Early societies likely relied much more heavily on gift economies, reciprocity, and complex systems of debt and obligation.
So I owe you one, you owe her one, that kind of thing.
Kind of, yes. Barter might have been more common when dealing with strangers or maybe even potential enemies, people outside your immediate social network.
Interesting. So when did we start using actual stuff as money?
That's the next stage. Commodity money, using things that have intrinsic value themselves.
Like what, gold?
Gold, eventually, yes. But earlier examples are fascinating. In Mesopotamia, the shekel wasn't a coin initially. It was a unit of weight, specifically of barley, about 160 grains.
Barley. Like the grain? You paid in grain.
Essentially, yes. Or think about shell money. Cowrie shells were used incredibly widely.
I've heard of that. Where were they used?
All over. Parts of the Americas, Asia, Africa, Australia. They were durable, portable, recognizable. They worked.
Wow. Seashells is international currency. That's amazing.
And then, yes, precious metals gradually became more dominant. Gold, silver, copper. Their rarity, divisibility, and desirability made them very suitable.
Okay, so we've got valuable stuff being used. But carrying barley or weighing gold sounds tricky. What was the next leap?
The invention of coinage. This is a huge step.
Right, stamping the metal. Who did that first?
According to the historian Herodotus, it was the Lydians in what's now Western Turkey, around 650 to 600 BC.
And they used gold and silver.
Yes, they started making coins from electrum, actually, which is a natural alloy of gold and silver. Then later, separate gold and silver coins. The key was the stamp.
What did this stamp signify?
It was like an official guarantee from the issuer, the king or the city, about the weight and the purity of the metal. No more weighing bits of gold for every transaction.
It makes things much easier. Trust in the stamp.
Exactly. But here's a fun, slightly crazy fact. Almost as soon as these coins appeared...
Let me guess. Fakes.
You got it. Archaeologists have found early Lydian coins called forays. They look like solid silver or electrum, but they're actually copper cores plated with the precious metal.
No way. Counterfeiting is basically as old as coinage itself.
It seems so. People trying to pull a fast one right from the start.
That's incredible. Okay, so coins are great, more trustworthy, but still heavy if you have a lot.
Definitely. Carrying chests of gold isn't practical for large-scale trade. This leads to the next innovation. Representative money.
Paper promises.
Essentially, yes. Think about goldsmiths. They had secure vaults. People would deposit their gold or silver with them for safekeeping.
And get a receipt.
Exactly. And soon, people realized they didn't need to withdraw the gold to pay someone. They could just hand over the goldsmith's receipt.
As long as everyone trusted the goldsmith would pay up if asked.
Precisely. Those receipts started circulating as money because they represented a claim on the actual commodity.
Like an early form of paper money.
Mm.
But who made the first official paper banknotes?
For that, we need to look to China. The Song dynasty, around the 10th century AD, they introduced paper money called jiaozi.
Jiaozi, how did that come about?
It evolved from earlier promissory notes used by merchants. The government eventually took over and issued official paper currency.
Wow, China was way ahead on this.
Centuries ahead, Marco Polo, when he visited China in the 13th century, was amazed by the Yuan dynasty using paper money made from, get this, mulberry tree bark.
Tree bark, you're kidding.
Nope. He wrote about it. Europe didn't really get into paper banknotes until much later. Stockholm's Banco in Sweden issued some in 1661.
So paper starts replacing coins, at least for larger amounts. Then we get the gold standard. What was that about?
The gold standard was a system where paper money became directly convertible into a fixed amount of gold.
So you could literally take your banknote to the bank and demand gold for it?
In principle, yes. It tied the value of the currency directly to gold reserves held by the country. This system became dominant in many places by the 19th and early 20th centuries.
It sounds stable, linking money to something tangible like gold.
It had its pros and cons. Stability was one aim, but it also limited the flexibility of governments to manage their economies, as the money supply was tied to gold mining.
Right, you couldn't just create more money if the economy needed it. You needed more gold.
Exactly. Then came the big shift after World War II with the Bretton Woods Agreement.
What happened then?
Currencies were pegged to the U.S. dollar, and the U.S. dollar itself was still pegged to gold. So an indirect link remained for most countries.
Ah, the dollar became the key currency, backed by gold.
For a while. But in 1971, a major event happened. The U.S. government, under President Nixon, unilaterally ended the convertibility of the U.S. dollar to gold.
That's cut the cord.
Pretty much. It's often called the Nixon shock. And that move effectively ended the Bretton Woods system and ushered in the era of modern fiat money.
Fiat money, that's what most of us use now, right?
Yeah.
Dollars, euros, yen.
Correct. Fiat money isn't backed by gold or silver or any physical commodity.
So, what is it backed by? Just faith?
It's backed by government decree, essentially. The government declares it legal tender, meaning it must be accepted for payments, especially taxes.
So the government says it's money, and we need it to pay taxes, so we accept it.
That's the core idea. Its value comes from the trust in the issuing government and the stability of the economy. Some economists argue the tax obligation creates a fundamental demand for the currency.
It's quite a leap from a gold coin you can bite. It's more abstract.
Very much so. It relies heavily on collective belief and institutional stability.
Okay, so whether it's shells, gold, paper, or digital entries, for money to actually work, it needs certain qualities, right?
Absolutely. There are some key properties that make something function well as money.
Let's see if I remember. It has to be fungible. Like, one unit is the same as another.
Yes. Fungible. Your dollar bill is interchangeable with my dollar bill. Good start. What else?
Durable. It shouldn't fall apart after one use.
Definitely needs to withstand wear and tear.
Divisible. You need to be able to break it down for smaller purchases. Can't buy gum with a gold bar easily.
Very true. Divisibility is crucial.
Portable. Easy to carry around. Unlike, say, giant stone discs, which were apparently used as money somewhere.
Yes, the rice stones of Yap. Not very portable at all. So portability is key. What else?
Acceptable. People have to actually want to take it as payment.
Acceptability is fundamental. It rests on that shared trust we talked about. And one more big one.
Scarce. It has to be limited in supply. If it grew on trees, it wouldn't be valuable.
Exactly. Limited supply or scarcity is vital for maintaining value. You've nailed the main properties. Fungible, durable, divisible, portable, acceptable, and scarce.
Cool. So those properties make it work. Now, how do we measure how much money is actually out there? The money supply?
Right, the money supply. It's basically the total amount of money all of those financial instruments used for buying things circulating in an economy.
And economists have different ways of measuring it. Those M's, M0, M1, M2.
Yes, the monetary aggregates. They represent different levels of liquidity or how easily the money can be spent.
Okay, break it down for me. What's M0?
M0 is the base money. It's the physical cash coins and banknotes in circulation, plus the reserves that commercial banks hold at the central bank. It's the narrowest measure, the stuff the central bank directly creates.
The foundation. Got it. Then M1.
M1 builds on M0. It includes all of M0 plus demand deposit.
Demand deposits, like checking accounts.
Yes.
Money you can spend right now.
Exactly. Your checking account balance, traveler's checks, though less common now. M1 represents the most liquid forms of money readily available for transaction.
Okay. M0 is cash and bank reserves. M1 adds checking accounts. What about M2?
M2 is broader. It includes everything in M1, plus things like savings accounts, money market deposit accounts, and small denomination time deposits, like certificates of deposit under a certain amount.
So money that's still pretty easy to access, but maybe not instantly spendable like cash or a checking account.
That's the idea. It's slightly less liquid than M1, and then there's M3, which is even broader.
What does M3 add?
M3 includes M2 plus larger time deposits, institutional money market funds, and other less liquid assets. The definitions can vary slightly by country, and some central banks don't even track M3 anymore.
So it's like widening circles of what counts as money based on how easily you can spend it.
A good way to think about it. Now, the really interesting question. Where does all this money, especially beyond the physical cash, actually come from?
I always assume the government just prints it or the central bank does.
The central bank does create M0, the base money, minting coins, printing notes, but that's usually a small fraction of the total money supply, especially M1 and M2 in developed economies.
So where does the rest come from?
Mostly from commercial banks.
Yeah.
When they make loans.
Wait, you mean when a bank gives someone a mortgage or a business loan,
Yeah.
they're creating new money?
In essence, yes. It's a core part of how fractional reserve banking works. They don't just lend out money that savers have deposited. Not entirely. When a bank approves a loan, it typically credits the borrower's account with the loan amount electronically. Poof. New deposit money exists that wasn't there before.
That is kind of mind-blowing. So
Yeah.
lending creates money.
It's the primary way the broader money supply, M1, M2, expands and contracts in a modern economy. Repaying loans destroys money in a similar way.
Wow. Okay. That changes how I think about banking completely.
It's a crucial concept.
Yeah.
And it relates to market liquidity, how easily assets can be turned into money. Money itself is the ultimate liquid asset.
Right. Cash is king because you can spend it instantly. Trying to pay for groceries with like a rare stamp collection, not so liquid.
Precisely. Okay, we've touched on different forms through history. Let's quickly recap the main types of money.
We had commodity money value from the material itself, like gold or barley.
Check. Then representative money tokens, or paper backed by and redeemable for a commodity.
Like those old gold certificates.
Right. And today's dominant form.
Fiat money. Value by government decree, like our dollars and euros.
Correct. We also briefly mentioned demurrage currency.
Oh yeah, the money designed to lose value over time, to encourage spending. That still sounds weird.
It's unconventional, designed to boost circulation by making hoarding costly. It emphasizes the medium of exchange function over the store of value function.
Then we have coinage itself, stamped metal, leading to banking.
With those ancient tiered systems, gold for big stuff, silver for medium, copper for small.
And paper money, banknotes, making things lighter and helping credit.
Yep. And the big one today, alongside fiat physical currency.
Commercial bank money, the digital money in our accounts.
Exactly. Demand deposits, created largely through that lending process we just discussed, accessed via checks, cards, online banking.
Which is mostly electronic or digital money now, right?
Overwhelmingly so in developed countries. And that category now also includes newer developments like cryptocurrencies, Bitcoin being the first big one, introducing decentralized digital currency.
Right. A whole other can of worms for another time, maybe. Now, if you're finding this journey through money as fascinating as I am, this might be a good moment to remind you to hit that subscribe button.
Absolutely. We explore all sorts of fascinating topics here on Tell Me More, so subscribing ensures you won't miss out on future deep dives.
Okay, so we have all this fiat money, mostly digital, created partly by central banks, but mostly by commercial banks lending. How do we keep it stable?
That's the job of monetary policy.
Managed by the central bank.
Yes. Back when money was tied to gold or silver, the supply was sort of naturally constrained by mining. Gold rushes could cause inflation, slow mining could cause deflation.
The economy was kind of riding the waves of gold discovery.
To an extent, yes. With fiat money, central banks have tools to actively manage the money supply and influence the economy. Their main goal is usually stability, keeping inflation low and predictable.
What kind of tools did they use? We hear about interest rates all the time.
That's a major one. The central bank sets a target for short-term interest rates, influencing the rates commercial banks charge each other, and ultimately the rates businesses and consumers pay for loans. Lower rates tend to encourage borrowing and spending. Higher rates tend to cool things down.
Makes sense. What else is in their toolkit?
Open market operations are key. That's when the central bank buys or sells government bonds in the open market.
How does that help?
Buying bonds injects money into the banking system, increasing liquidity and potentially lowering interest rates. Selling bonds does the opposite. It withdraws money.
Like adding or removing water from a tank.
A decent analogy. They also use forward guidance, basically communicating their intentions about future policy to manage expectations. And they can change reserve requirements, the fraction of deposits banks must hold in reserve, though this tool is used less frequently now in many places.
So they have quite a few levers to pull.
They do, but it's a complex balancing act. Get it wrong, and you can have serious problems.
Like what?
Like runaway inflation, hyperinflation, where money becomes almost worthless. Or if they tighten too much or misjudge, they could trigger a recession or even deflation, which can also be very damaging.
High stakes. Okay, shifting slightly.
Mhm.
Money is usually tied to a country, right? My dollars aren't much use if I go to Japan.
Generally, yes. Money operates within a specific socioeconomic context, usually a nation-state. Each country has its official currency.
Though sometimes, like in border towns, places might take currency from both sides.
Sure, that happens. Or in very tourist-heavy areas. But officially, foreign currency is usually treated as an asset you'd need to exchange, not as direct payment for everyday goods.
And can the money a place uses actually change?
Oh, definitely. It can happen intentionally. A new government issues a new currency. Or it can happen spontaneously.
Spontaneously. How?
Think about extreme hyperinflation. If people completely lose faith in the national currency, they might just start using a more stable foreign currency, like the US dollar, for everyday transactions. It's called currency substitution or dollarization.
Wow, people just collectively decide, nope, not using that anymore.
It happens. Or think about innovation. Checks changed how people used bank deposits. Gresham's law, bad money drives out good, is another example, where people hoard the more valuable currency and spend the less valuable one.
And you mentioned those informal systems like in POW camps.
Exactly. Where cigarettes or some other commodity becomes the accepted medium of exchange because the official money isn't available or relevant. It shows how fundamental the functions of money are. People will find something to fill that role.
It really highlights that money is built on agreement and utility. Fascinating.
Sure.
Okay, one last area we should probably touch on. The dark side.
Ah, yes. Financial crime. Money, being valuable, inevitably attracts criminal activity.
Like counterfeiting, which we learned is almost as old as money itself.
Sadly, yes. Creating fake currency has always been a problem. Historically, using intricate designs or hard-to-get materials was one way to fight it. Modern banknotes have incredibly complex security features,
Holograms, special threads, watermark,
all designed to make counterfeiting harder. Then there's money laundering.
making dirty money look clean.
Exactly. Taking proceeds from illegal activities, drug trafficking, corruption, whatever, and disguising the source to make it look like legitimate income. It's a huge global issue.
Complex networks to watch the money through layers of transactions.
It often involves complex international transactions, shell corporations, and exploiting loopholes in financial systems.
So money's story isn't just about innovation in economics, but also about crime and deception.
It reflects all aspects of human society, the good and the bad. So we've gone from barley and shells, through gold coins and paper promises, to government fiat and digital bits, managed by central banks, created partly by loans.
And constantly battling fakes and laundering. It's been quite a journey.
It really has. Money is so much more than just coins or apps. It's a system of trust, a historical record, a social technology that has shaped and continues to shape our world in profound ways.
Absolutely. This deep dive really peeled back the layers on something I thought I understood, but clearly there was so much more to it. Hopefully you, our listeners, feel the same way.
It makes you look at that cash in your wallet or the balance on your screen a little differently, doesn't it?
It really does. And it makes me wonder, what's next for money? With crypto, central bank digital currencies, The story is clearly still evolving. What new questions has this sparked for you? What other hidden stories are waiting in plain sight?
Always more to explore.
Definitely. Join us next time on Tell Me More Stories Told This podcast as we dive into another fascinating topic. And please, if you enjoyed today's exploration, do hit that subscribe button so you don't miss our future adventures. Thanks for listening.
Thanks, everyone.